Japanese auto major Nissan has said it is recalling some 1.2 million cars in Japan that did not meet domestic rules for final inspection of vehicles. Approximately 1.2 million vehicles were produced between October 2014 and September 2017, and it would be subject to re-inspection. Announcement came after Nissan's shares slumped in Tokyo on reports that tests were performed by staff who were not certified to check the vehicles to Japanese government standards. Recalls have been a global phenomenon, with major Japanese auto companies, including Toyota and Honda, have recalled millions of cars. And staying with news from Japan, where Bank of Japan's Tanken quarterly survey showed that ratio of companies complaining of labor shortages rather than excess staff was at its highest level since 1992. Companies in Japan's service industries are struggling to hire and retain staff as labor market becomes tightest in decades. So labor shortage worsens in Japan. A ratio of firms complaining of labor shortage is highest since 1992. So companies in service industry are struggling to hire and retain staff. In Japan, the problem of aging population is very severe, and that is hitting the economy now. Firms are taking unorthodox steps to alleviate the labor shortage. Housewives, retired personnel, they are being hired now as young population is hard to hire. Companies are cutting opening hours, delaying plans, and Japan's jobless rate growth is at 23-year low of 2.8% in August. And labor squeeze can reduce the speed of economic development as far as Japan is concerned. Japanese firms are taking unorthodox steps to alleviate the shortage. Companies are looking at other steps, including looking to housewives and retired personnel to come in or rejoin the labor force. In some cases, it means offering better working conditions for some staff, even if this requires raising prices. In other companies, they are reducing services they offer by cutting opening hours or delaying expansion plans. Japan's jobless rate stood at 23-year low of 2.8% last month, reflecting a strengthening economy and shrinking working age population. In a rapidly aging society, the labor squeeze can reduce the speed of economic development and even curb some economic activity altogether, hurting Japan's chances of period of sustainable growth. Move from US auto world, and it's news coming there that Ford Motor has formed a team to accelerate global development of electric cars and vehicles. So Ford has created a new electric team in Detroit. Team's mission is to think big and make quick decisions. And Ford has not altered its plans to spend $4.5 billion on electrified vehicles so far. And US auto major has recently tied up with India's Mahindra & Mahindra, and one primary objective is to cut development of electric cars as far as the overall deal is concerned. So as we told the viewers, the mission of the new team will be to think big and make quicker decisions. One aim of Ford's Team Edison, it's called Team Edison, is to identify and develop electric vehicle partnerships with other companies. That's one they have done in India already. The partnerships will be with suppliers as well in some markets. The new team will be based in Detroit area and work with regional Ford vehicle electrification teams in China and Europe. China, India and France, UK also, they all have announced plans to phase out vehicles powered by combustion engines and fossil fuels between 2030 and 2040. However, Ford has not altered its previously announced plan to spend $4.5 billion over 5 years on electrified vehicles, including plug-in hybrids. The new team will report to Ted Cannins, the Global Director of Electrification. And Transport for London, or TfL, which runs and regulates capital's transport system, it shocked Uber last month by deeming it unfit to run a taxi service and refusing to renew its license. But today, Uber's boss Dara will meet the TfL's boss. And Uber's license trouble, and Uber boss Dara Khosrow Shahi will meet London Transport CEO today. The Uber last month deemed unfit to run a taxi service in London. And London's Mayor Sadiq Khan is also chairman of TfL. And the problem happened like this. The TfL cited firm's approach, which means Uber's approach, to report serious criminal offences and background checks on drivers. Uber's British management has been, we can say that, been criticized by London Mayor Sadiq Khan, who is also chairman of TfL. Khan said the firm needed to spend less time hiring an army of PR experts and an army of lawyers and instead address issues raised by TfL. Uber's license expired on September 30, but its roughly 40,000 drivers are still be able to take passengers until an appeal process is exhausted, which could take several months. Dara Khosrow-Shahi, he was appointed Uber CEO in August, replacing co-founder and former boss Travis Kalanick, and has promised change at $70 billion firm. He is battling to steer a new course for app which has faced regulatory crackdowns, court cases, bans and protests around the world, as well as several boardroom controversies. Uber's fate in London will be decided by a judge who will rule on appeal after it is submitted by October 30. And moving to biggest news from India, where Reserve Bank of India, which is central bank, will start a two-day monetary policy meeting today. And government and Indian corporates, they expect a helping hand from Reserve Bank of India in the form of interest rate cut in the monetary policy meeting. Monetary policy meeting is beginning today. It is two-day meeting. Tomorrow, the decision will come by afternoon whether government or RBI is going for rate cut or not. Consumer price index-based inflation is already at 2.36%, and RBI's monthly monetary policy decision will come on October 4th. And India Inc. has already made a pitch for rate cut by Reserve Bank of India. The meeting will begin today to boost growth, which fell to a three-year low of 5.7%. Several experts and industries bodies too have made a strong case for lowering of key interest rate in view of subdued inflation. There is urgency also to propel economic growth, which appears to be reeling under the impact of note ban that happened last year and GST implementation. However, RBI is likely to maintain status quo on key lending rate in its tomorrow decision, as it is stuck in a conundrum of low growth, mild inflation and global uncertainties. Moving back to global news, where UK is trying to bring home around 110,000 travellers after its oldest airline, Monarch Airlines, has ceased operations with immediate effect. It has left around 110,000 customers stranded overseas and about 300,000 future bookings cancelled. UK's Civil Aviation Authority confirmed that Monarch Airlines will not operate anymore. Monarch Airlines made the announcement on Twitter saying that airlines has suspended flights. UK government has asked Civil Aviation Authority to charter more than 30 aircraft to bring back Monarch Airlines customers who are currently overseas and on different holiday plans. UK's largest ever airline to enter administration is Monarch Airlines. Government has begun biggest ever peacetime repatriation effort to return the affected passengers. Monarch said it was talking to potential partners after a report that part of its short-haul network would be sold. Tough competition in the airline sector has been putting pressure on weaker European carriers and driving consolidation there. And former Uber CEO Travis Kalanick has named 2 new directors without consulting company's new leader or other existing board members. Kalanick said in an announcement that he had appointed Ursula Burns, Xerox former CEO, and John Thain, the ex-Merrill Lynch chief, to startups board. Uber challenged the appointments, calling them a complete surprise. The former CEO is defending himself against a lawsuit brought by Uber's largest shareholder. So this is another bone of contention, which we can say has actually created a lot of trouble. And directors have been named without consulting the board, and that is causing ripples in Uber management. And Kalanick has asserted his right to pick directors. So the overall confrontation is between the former CEO and co-promoter Travis Kalanick and Uber's current management. Uber said that appointment is completely a surprise for it, and it doesn't stand by the appointment. As we told the viewers, Ursula Burns, Xerox former CEO, has been appointed the director as well. And John Thain, ex-Maryland CEO, is also among directors. Where Reserve Bank of India will start two-day monetary policy meeting today. The meeting will start in Mumbai, and while government and corporates are expecting a rate cut, experts are predicting no rate cut or status quo as far as RBI's bi-monthly policy meeting is concerned. So meeting will begin in Mumbai today, and thereafter tomorrow it will be decided and announced whether they have gone for any rate cut or not, or has maintained a status quo. To talk more on this, we are joined by our economist Sujash Bhatt. Good morning to you, Mr. Bhatt, and I would like to first of all ask you, what are your predictions? Any likelihood of rate cut coming?
Morning, Sumit. It's a tight spot in which RBI is in, because if you see economically, we don't have room available for a rate cut, because globally all economies are tightening the monetary policy. So you've seen the Fed, you've seen the ECB. All of them are in a no mood for fiscal stimulus or a kind of loosening up of economy. So when globally this is not a trend, if India does this, it would be a very bold move, because it would have a direct impact on your currency. And knowing the last 2 week slide on the currency Indian rupee, it's highly unlikely that something like this could happen. Also, there's a view that fiscally this is not something which is allowed or probably should be done from a central bank side. And we are in a tight spot from an economic perspective, because if we do not have a rate cut right now in an economy, the economy is already slowing down and it's grappling with so many issues like demonetization, GST, and slowdown in GDP. And a rate cut is rate cut is the only option out of this crisis. So it's a very tight spot that the governor is in, and it's really difficult to say which way it would go. I think the government would want the central bank to loosen up a little bit, and that I think is from a government side. But from a central bank side, I can really empathize with Mr. Patel on this situation.
And Mr. Bhatt, RBI has to have a tightrope walk this time, because inflation, the target, has to be met. Also, they have to see what should they do as far as corporates' demand for rate cut is concerned. So, in your opinion, will the RBI now overlook this demand this time as well? Last time, they went for it.
Right. So, in fact, it's a very tricky situation now, knowing that even the globally crude oil, which is generally the party spoiler, has already crossed $50 per barrel. And the way inflation numbers have come out last week, it really puts the central bank in a tight position, because you need to understand all these decisions that they make are not looking at the current situation. They would generally anticipate what's going to happen in weeks to come and then take an action today. So the past data shows that inflation has already tricked into the economy. So having a rate cut right now may fuel this process of rising prices and all that, which definitely is something which the central bank would not want. But at the same time, the economy has slowed down so dramatically that unless there is some kind of liquidity pumped into the system, it's very difficult to come out of the system, the slowdown that we have gotten.
Thank you, Mr. Bhatt, for talking to us and giving us such an important perspective as we talk. And as we told the viewers, RBI is going to begin a two-day monetary policy meeting today, and the decision will be announced tomorrow.
Thank you, Sumit.
And let's go back to global stories once again. South Korean exports have surged to record last month in the latest sign that stronger global trade is helping to underpin growing momentum for the global economy. Nation's shipments abroad rose for an 11th month in September, driven by demand for steel, semiconductors and petrochemical products. South Korea shipments, they climbed for 11th month in a row, and the export surge was steepest monthly jump since July 2011. The Trade Ministry in Korea expects exports growth could slow down going forward. And the imports have gained 21.7% versus expectations of 20.6%. The median estimate, however, was of a surge of 25% of imports. It gained 21.7% that time, and versus expectations for them to advance 20.6%. The trade surplus was $13.8 billion. It was also a record month-on-month growth in exports. This was the most since January 2011. Let's go over to China, where China has decided to maintain and go ahead with the reforms as far as currency reforms are concerned. So China's central bank PBOC, or People's Bank of China, has said it will maintain prudent and neutral monetary policy and use multiple monetary policy tools to keep liquidity basically stable. The People's Bank of China will continue with interest rate and exchange rate reform while keeping the yuan basically stable. PBOC has said this. PBOC is the People's Republic of China, and China will use multiple monetary policy tools. PBOC will try to keep yuan stable. And China's economy has maintained steady growth so far. And let's go to Indian and global markets. Let's begin with Indian markets. The market, Sensex and Nifty, both started the day in green zone. Sensex was up 300 points in the morning, but now it is up by 220 points. Nifty, on the other hand, is up by 64 points. So a lot of gains seen over there. Today is the day after almost, we can say that 4 days of continuous shutting down of markets. The markets have, Indian markets have opened in green. Sensex up by 220 points. While Nifty is also up. Let's take a quick reaction from our analyst for this morning, Mustafa Nadeem. Good morning to Mr. Nadeem. Pardon us, and it's Mr. Jan. Mr. Jan, I would like to again ask you, how do you see the trade happening today?
I think we need to see how the markets, behave. Like in the morning, some gains have sold off because there is a huge selling by the foreign institutional participants. Moreover, people are waiting on the sidelines, want to see how the RBI perceives the current economic scenario in view of the falling growth and, risk to the inflation, especially in view of the rising crude prices. I think probably it is looking that RBI may keep a status quo because it is the only trigger which may give impetus if RBI decides to go for a rate cut, because there is a huge pressure coming from the government. All in all, I think the market should hold to the gains today, and investor would like to see how what will be the outcome tomorrow.
And what about global markets, Mr. Jan? Well, Asian markets are trading in mixed. Nikkei was up, but Straits Times was down. So what is the overall impact? And also, we can say that the kind of Los Angeles attack we saw, so markets have discounted that attack.
I think that attack is was very harsh in US, but I think markets did not factor in those kind of attacks. And moreover, the economic data out of US, like manufacturing index and China cutting down the reserve ratio requirement, all looks to be positive for the markets. I think for the fourth quarter again, US has entered into fourth quarter with a positive momentum because yesterday markets closed in green. So from the global perspective, I think the markets are looking pretty strong, and and may complement gains in the domestic bourses.
And also one quick reaction from you as far as overall we can say that week ahead is concerned. What do you think would be the good bet in those circumstances? What should investors do?
I think it is largely a trader's market now, because we have seen huge volatility coming in the markets, and it is not the broader gains which see a good amount of sell-offs largely from the institutional investors selling. It is the huge selling which comes into the mid-cap and small-cap space, and normally retail investors have parked their funds into those camps only, mid-caps and small-caps largely. So it is largely a trader's delight market. And whenever there is a huge selling coming in, we see traders jumping up in the markets and want to take advantage of the same. So I think from the investor perspective, I think it is not that the market is not that cheap, and it looks pricey in terms of growth which is coming in and which is expected to come. Moreover, the earnings season is not going to be very exciting this time also, because of the impacts of the GST and demonetization. So I think all in all, the stock specific activity will continue to rule the bourses, and
Right.
It is largely the institutions market.
Right, Mr. Jain, thank you for talking to us, and let's take a look at the markets before we go. Indian markets again, we can see up, Sensex up by 0.7% and Nifty is up by 0.62%. So good opening for Indian markets over there. Well, that's all today we have in this edition of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.